That interview you mentioned, we probably joked about Bitcoin going up and then crashing back to 40,000 one day. And there we are today.
One of the most known names in the crypto industry, PlanB, is solely responsible for creating one of the most well-known Bitcoin indicators in the crypto space as of yet, the stock-to-flow or S2F model. The model, sadly though, has been on a streak of disappointment since March 2021 due to the increased difference between the predicted and the current price. But some still hold true to it as it predicts Bitcoin hitting $100,000 soon. Watch till the very end. PlanB's latest predictions. PlanB had been predicting a $98,000 Bitcoin by the end of November 2021. However, he has since clarified that his forecast was based on merely one of his 3 forecast models. To clarify, my 98K November prediction is not based on my stock-to-flow model, but on my floor model, PlanB said. As I said before, in tweets and latest podcasts, I use 3 models. 1. S2F model. 2. Floor model. 3. On-chain model. If, for example, 98K November floor model prediction fails, that does not mean S2F or on-chain fails. However, the man, who popularly goes by the pseudonym PlanB to protect his very own identity, has been shockingly accurate with his predictions in the past. When Bitcoin fell below $34,000 in June of this year, he correctly predicted the price would rise up to $63,000 by November. Will the Bitcoin price crash again? What goes up definitely must come down. PlanB seems to think that if this does eventually end up being an enormous bull run, like those before it, will end with a significant price crash of up to 80%. I seem to be one of the few who thinks we're in a normal cycle, that will go down again after the all-time high, he exclaimed. Everybody hopes for the supercycle or for the hyper-Bitcoinization to start right now and that we do not have a big crash after the next all-time highs. But, as much as I would hope that we don't see that crash, I think we will. I think we'll be managed by greed right now and fear later on, and see another minus 80% after we top out at a couple of $100,000. Previous misses and failures.
And that Warren Buffett quote, I use it a lot. It goes back to the volatility argument. If an asset is very volatile, then the chances of estimating or evaluating it very precisely are lower than if it's an asset that doesn't move very much, so like gold or actually any other asset. So to try to predict or evaluate Bitcoin is it must be a very rough estimation. And you're right, the stock-to-flow model is very rough. So stock-to-flow is basically saying that if an asset is scarcer, it should be more valuable. And well, how do you quantify scarcity? There is a known measure, that's the stock-to-flow measure. It's the number of years it takes for a reserve in a certain asset to replenish that reserve. So for gold, there is 60 years of production above ground stock. And so the stock-to-flow ratio is 60. So the scarcer an asset, the higher the stock-to-flow ratio, the higher the value of that market should be. And it's a very principle-based, very intuitive thing that scarce things are more valuable. And this model very roughly, very simply as well, because it doesn't use any other input variables.
The stock-to-flow model shows the stock as the size of existing reserves or stockpiles and the flow as the annual supply of brand new Bitcoins in circulation. It began to gain a lot of traction amongst BTC bulls as it was super accurate until recently and provided highly positive price predictions. However, one of such forecasts envisioned Bitcoin going to and beyond $100,000 by the end of last year, which obviously didn't come to life. As such, the number of S2F critics increased drastically. PlanB has another model, which he calls floor model or worst-case scenario, that also showcased high accuracy for several months in a row. However, it also stood broken in November and December of last year as it projected Bitcoin prices of $98,000 for the former and $135,000 at the end of the latter. Despite such misses here and there, PlanB seems quite certain that Bitcoin will inevitably reach a 6-digit price territory, even if it takes a few more years than previously envisioned. PlanB's next plan for Bitcoin.
That interview you mentioned, we probably joked about Bitcoin going up and then crashing back to 40,000 one day. And there we are today. And I think it's an excellent question about the volatility because, I mean, Bitcoin is so volatile, it gets attacked for that attribute. But with the volatility comes a return. And I guess experienced investors know that there cannot be return without volatility. But I've seen it personally with the stock to flow model and with Bitcoin now 3 times up and 3 times down, that when Bitcoin is up very much, everybody wants to buy it. And stock to flow model and PlanB is the man, the myth, the legend. But when it's down and where we are today, and we experienced that in March 2020 with the COVID, when COVID first hit us, but also in March 2019, when I published the article, we were really very much down. It's all Bitcoin is dead and it's a bear market. It will go to zero. It seems like a black or white thing. And investors and people in general seem to forget that it's just volatility and the overall trend. If you, for example, look at the 200-week moving average, the 4-year moving average, the overall trend is going up.
Even though the deviation began in March to July 2020, right after the third halving, Bitcoin managed to stand true to the S2F model by January 2021. However, that very euphoria was rather short-lived as, just a month later, BTC's price began deviating again and has since remained far below the S2F price prediction.
There's a lot of stories about manipulation, about the futures ETF coming alive with all the possible manipulation around that. There's a lot of speculation about central banks pushing the price down, much like in the gold market. But I think it's much simpler than that. We saw a China miners ban halfway last year, and that wiped out half of the hash rate, half of the security of the network. That was a major thing, major structural event, macro event, you might call it even for Bitcoiners. But that wiped out half of the hash rate, and all the miners had to move and relocate their stuff to the countries around China and to America, Texas mainly. So that was the number one reason, very obvious, very clear, to impact the price of Bitcoin.
The crash of May 2021, wherein the King coin dropped by around 44%, was the biggest factor in this divergence. Bitcoin went on to recover again by November and touched an all-time high of $67.5 thousand, reinvigorating hope into its investors for Bitcoin to reach $100,000 by year-end. But sadly, that never seemed to happen either. This led a lot of people to lose hope in the S2F model as a multitude of external factors didn't seem to be taken into consideration, making the model obsolete to current conditions. But PlanB in their tweet recently seemed to be certain in the model, as it predicts Bitcoin to touch $100,000 by 2023. On a Twitter user's concerns regarding the model's recent failure, PlanB replied, "It does not concern me yet. But it certainly leads to the question, do we need to refit the model to this new lower data, or do we have to be patient and finish this cycle first, because prices can be higher in the second half of the cycle, bringing the average back to $100,000. Can Bitcoin actually hit 100K though? If we were simply to consider the price action behavior, there would be some chance. However, in order to do that, Bitcoin may have to make a 125.92% rise within the next 10 months. In BTC's own history of year-end bull runs, there have merely been 2 moments when such a rally took place. First in 2018, then in 2020. Thus, allowing it an entire year's time makes it seem possible for the King coin to reach $100,000 by 2023.
For example, not supported by the central banks like stock markets is. So there's a lot of volatility in Bitcoin, and I think it's here to stay.
However, not having factored in the external developments would be irresponsible, since a lot of countries are not yet in favor of cryptocurrencies. And while many haven't outright placed a ban, they are seeking to transition their citizens towards CBDCs in order to maintain control over the digital transactions. These occurrences could definitely hamper the possibility of BTC to 100K happening. How severely, though? That is yet to be found out.
I certainly think that trend is going to continue. And as a matter of fact, there is rumors in the market that a second country after El Salvador will adopt Bitcoin within 3 months. We don't know which country that is, or well, those rumors, we'll talk about it. And there's a lot of countries thinking about it. And well, I think it's a very smart move, to be honest. If we look at El Salvador, if you declare Bitcoin as a strategic advantage, as a technology that will help your country and your citizens, and you make it legal tender like El Salvador did, then you attract a lot of Bitcoiners, technology, brains, capital, and much in the same way that America did with the Silicon Valley. If you embrace technology like Silicon Valley did, you attract all the engineers and all the capital and venture capital, and that will bring great prosperity to your country. So I think what El Salvador did was very wise. We saw it playing out last couple of months. And El Salvador is now one of the few countries in that region that has a positive growth trend in tourism, in general economic growth. Especially countries with a currency of their own that doesn't do very well because they made policy mistakes in the past. They printed too much money. They had too ambitious government programs that had to be financed. And so countries like Venezuela, Turkey, Brazil, Mexico would be ideal candidates to make Bitcoin legal tender like El Salvador did. And that will, I'm sure, that will bring great prosperity. And the company or the country that has the best regulation will win this game. And the next crypto valley, if you will be in the country that has the best regulation.
Why Bitcoin halving could act as a trigger.
Out of the system right now. So there was a risk of, for example, before the halving, there was a risk that, there was another mining death spiral. So that miners and Bitcoin would not survive the halving, where the revenues for the miners would halve. Well, we obviously survived that. And then there was this big risk of China banning and China attacking Bitcoin. Well, obviously that risk has gone as well, because China is no factor of influence anymore. They stepped out of the Bitcoin market and pushed all the investors and miners away. So I guess there's a lot of risk that was in the market 2 years ago that is gone right now.
Bitcoin halving is something that comes about roughly every 4 years. It is the very time wherein the circulation is cut down to make sure the potential of the digital token is fully delivered. In a nutshell, Bitcoin halving is the very process wherein the rewards for Bitcoin mining get halved. It seems to happen after each set of 210,000 blocks are mined. By doing so, the price remains constant, while the supply being put under a limit. So far, according to history, every time a Bitcoin halving takes place, the digital token's value goes up drastically. However, sooner or later, it shall undergo a long bearish period after the bull run. When the first Bitcoin halving came about in 2012, we saw Bitcoin's value rise from $12 to $1,150 over time. During the second halving, it outran the $20,000 mark. Therefore, many investors believe that a Bitcoin halving could definitely act as the trigger to retrieve the cryptocurrency from its current slump. They claim that Bitcoin will increase in value and achieve far better growth. With that, we come to the end of this video. Consider subscribing to join in next time for more of such interesting content.